Welcome back, traders. Today we are going to look at gold indices and US dollar and for some opportunities in the market. Over the weekend we had the Israel and now Iranian conflict, which escalated Sunday evening, but then market opened, it was kind of like de-escalated. So despite these guys were shooting at each other with the most volatile missiles in the whole world, they were communicating that yes, we are ready to talk, and yet they continued to shoot at each other. So this has confused markets and traders. So while the market opened with a 200 pip gap up on gold, quickly it was de-escalating. So it's very confusing, and I'm still waiting to see what's going to happen after Trump left the G7 meeting, saying that he has more important things than the war escalation. And remember that we also have macroeconomic data this week. We have the retail sales for the United States. We also have Fed interest rate decision, which is absolutely not important. Yes, you heard it right. Most traders fixated on the interest rate decision, but we know that the Fed isn't going to change interest rate this week. What most professional traders are interested in is the summary of economic projections, which I'm going to talk about it. But in volatile times, the number one rule is to protect your capital. The best way to protect your capital is by using the Forex deposit bonus. So for example, if you deposit $1,000, you get $750 free on your account, and you can trade with it and you can redeem or withdraw any profit that you make. Make sure you check out the links below the video and use this software, because during these volatile times, you need every protection for your account. And now let's look at the markets. So here we are at the 30-minute gold chart. You can see that prior to the de-escalation, or the start of the Israel-Iran conflict or continuation, these guys shooting at each other for years now. But anyhow, before this weekend, you can see that gold was on a rally for 8 weeks, and this rally stopped straight after the weekend when Iran and Israel had a conflict. You can see that the conflict started with a gap up in the market open on Sunday. But then when these guys were shooting at each other, they were communicating that no, we want to talk, we want, discuss what happened. And the market took this as a de-escalation kind of process or protocol, so gold started dropping. Also, could this be the reason, or could the Fed be the reason that the Fed won't change interest rate, so keeping interest rates higher for longer? And this could be another reason why gold was dropping, because remember that Jay Powell was very, very clear on the previous interest rate decisions and press conferences that they're not going to change interest rate anytime soon. Despite PPI and CPI came very, very soft. Despite NFP came in very, very weak. So taking all of this into account, even the market participants don't think that the Fed is going to change interest rate that soon. Now, the next interest rate decision is going to be tomorrow. And most people is fixated on the interest rate decision itself, but if you look at the Fed Watch tool, which is a very good tool about the expectation of professional traders, what do they think, whether the Fed is going to change interest rate or not, you can clearly see that 99% believes that there will be no interest rate change. July, it's 85%, September, 58%, and October, it's more likely that the Fed is going to schedule the first interest rate cut in the second half of 2025. So, to summarize, this week we are focusing on the FOMC events, most likely, the FOMC economic projections, the statement. This statement and economic projection is released every 3 months, and it contains crucial information about the future monetary policy. We're not interested in the interest rate decision, we're interested in the economic projections and, of course, the press conference, which is going to shake the markets. So while Trump is trying to figure out or negotiate the Middle East tensions, or I don't know what he's doing, this is something that I cannot trade. I'm an economist and not a geopolitical correspondent, but even people who are seasoned in geopolitics and war, they find it difficult to navigate in this calamity or turmoil. So Let's do what I do best, which is fundamentals and economics. On the gold chart, 30-minute chart, you can see that gold is trading below the daily and the weekly pivot. Now, my expectation is that price will continue lower. Yes, you heard it right, will continue lower to around 3,362 or a little bit lower. But this is the first target. So if you're not selling, you can start selling straight away. Actually, I'm opening my phone right now and entering into a sell position as we speak. Oh, sorry, no, I'm in a sell position already. Okay, that's fine. So I entered the sell position somewhere around the bottom of this consolidation. Yes, you heard it right. Most people would buy here. I was in a buy as well. But when you look at the market, in a downtrend, when you see a support, it's a trap. Just sell the shit out of this. So the market on gold, price on gold should continue a little bit lower. So my target is going to be 3,362. Now this would give us a nice 223 pips. And at this point, you can see that on the trend line, bang on 78.60 and S2 on the pivots, there is free confirmation that price could bounce back from this price level, but we know that the issue or the conflict between Israel and Iran is still ongoing, and we don't know whether they're going to, agree on something. So the second entry for a rebound or reversal is going to be a little bit lower below the trend line. I don't know how deep price is going to drop, but chances are high that price will revisit 3,330, and from there it could bounce back. So we have multiple options, but what's clear is the price will sell off today and it could bounce back up on FOMC summary of economic projections. We don't know yet because we haven't seen the summary of economic projections. For now, I'm in a sell on gold, but then I will be looking for buys. And you can see that this range, anything above 3,300, have been actively supporting gold prices. And also you have the central bank gold purchases, which are important support for gold prices, higher gold prices. So this is what I'm expecting on gold. Just to recap, I'm selling all the way down to 3,360, and if it breaks the trend line, then I will be selling down all the way down to 3,330. Moving on to US indices, specifically Dow Jones 30 or US 30, which is one of my favorite assets. Now, many traders are asking me about what's happening with indices, and my bias on US indices is neutral to mildly bullish, depending on the Fed tone. Now, before the Fed interest rate decision, I think that the Nasdaq or the Dow Jones is going to sell off slightly, but it won't go anything lower than 41,700, or let's call it 41,500. So you can see that price is already in a range for weeks now. Price action stalled. Price is moving sideways. It's very indecisive. I would say buy the dips if Powell reassures markets. Risk to the downside if Fed signals a hawkish intent or data surprises, for example, to the upside, inflation and durable goods. So my best advice, I don't give any advices, but what I'm going to do is I'm going to buy the dips on US indices, because Trump most likely going to push the market even higher this year. And finally, the DXY or the dollar index. Now, the dollar is bleeding out for weeks and months now. You can see on the chart that, oh my God, it's just massive. So from 110 all the way down to 97, this is the fall of the dollar. There is a big macro theme going on globally, which is de-dollarization. So investors and traders are ditching dollar-denominated assets. I'm not talking about gold or anything like this, but more on the investment side. If you look at the European stocks, they are outperforming the US stocks year to date. So the dollar is most likely going to lose its value further this year if this calamity or turmoil is going on in the White House. So my forecast for the DXY is targeting 96 or even lower for the next 1 or 2 months. Now, once again, the most important rule is to protect your capital, and the best way to do it with the 75% deposit bonus. I almost said 50% because it says on the Forexy website 50, but AlphaFX Euros subscribers and members get 75% discount. So make sure that you utilize or capitalize on this one, because this is a limited offer until the end of the month. Use the link below the video and use AlphaFX75 code when you're redeeming the discount code. Thank you so much, guys. If you want macroeconomic analysis on a daily basis, go to alphafx.eu and take advantage of the £199 for lifetime. Thank you so much. This is the AlphaFX.